The interminable winter is finally broken here on Cape Cod. It's a lovely 70-degree mid-April day. Enjoying that. Quick video on events in Iran and what might come next for markets. If you've been watching my videos, you know I'm fully in agreement with the equity market, which is foreseeing a deal. I got some reporting from David Ignatius in the Washington Post the other day, which strikes me as accurate, that the Trump administration is basically offering the Iranians a bag of cash. It's something I've talked about a number of times in this space. They're being offered, from the president's rhetoric, calling them a new regime, debate whether that's true or not, more responsible, he's referring to them as, and comments from Vance as well suggest that Iran is being offered access to cash and the stamp of approval of the international community as the rightful leaders of Iran. They're being invited in after 50 years of being on the outside looking in to the global system of economic exchange if they pledge to behave. It seems like a pretty good deal when the alternative is you've already suffered something like $200 billion worth of damage domestically. Next steps will be to blow up your electrical grid. And now the president of the United States is signaling that we're not going to let you sell any oil either. You can debate whether a blockade works, but if kinetic activity picks up, we don't even need to blockade them. We just threaten to, blow up any ship that docks at an Iranian port, and that's that. But Twitter's pretty confident that Trump's bluffing. As I said in my last video, I think it's a bit of taco on the brain. I don't see the president trading away the Straits of Hormuz, forever tarnishing his legacy, looking like an asshole, frankly. For what? To limit the damage in the midterms, to maybe squeak through and win the Senate and only lose 30 House seats or something? I mean, it doesn't make any sense. He's not going to do that. I don't think he's bluffing. And I think the Iranians probably feel the same way and would be wise to take him at his word that next steps are not going to be good for them. So Iran is a pretty good deal on the table. They do have leverage in the strait. They need to monetize it. The survival maximizing strategy here for the Iranian regime is clearly to take the deal. And while the U.S. might renege eventually, Trump for the next 2 years will be committed to saying, hey, these are the good guys. Even if they're not behaving, he's going to pretend they're behaving. They'll have him boxed in like that. So the deal makes sense. Deal's going to happen. Looks to me like the dollar really wants to go down hard on this deal. There'll be a lot of talk about U.S. dollar hegemony at risk, and I don't buy any of that. I think it's as simple as this. The U.S. data has looked like it's held up throughout this okay-ish. The equity markets are really taking this bullishly, and I think we're just going to go into a risk-on frenzy that fosters benign liquidity conditions in which the dollar tends to weaken because you don't need precautionary liquidity when asset markets are melting up. And there was some precautionary liquidity built up that will be unwound. We saw a huge spike in C&I loans in March. When the shit hits the fan, companies say, I better take down my credit line, like COVID. I really could need liquidity. So that's what happened there. And that liquidity will be flushing through the system too. This all continues through the end of the month until we get the next CapEx reports from the hyperscalers. And if AI CapEx slows, this will all unwind. But who's holding their breath for that at this point? All the reports are that these AI chatbots are hitting compute constraints. My guess is these CapEx numbers get revised up again, as crazy as that might seem, and this risk rally continues into the summer. But more on that in weeks to come. For now, expect this nice run for equity markets to extend here.